So Bitcoin here has fallen a total of 4.62% yesterday. This was after a recent move to the upside where we saw growth for Bitcoin rallying up a total of 8.05. The question now becomes, are we still in a bullish market or are we now actually in a bearish position, and is Bitcoin likely to fall further down? If you're new to the channel, my name is Nick and we are going to discuss the technical analysis on BTC. Let's jump right down into this video. So here we have this chart. This is a smart money concepts chart. It basically shows us the idea that big money has entered into the space, and also shows us the idea of how they typically would behave so we can predict what happens next. Okay, now I did a whole course on smart money concepts. If you're not familiar, you can check that out and linked in the description below at the Cheeky School. Let's jump into this one though. So we can see that we do have a bearish structure right here with the change of characteristic into a bearish state of play. Okay, we can see that there. We also see that we have a weak low, strong high. This is just because we're in that bearish state of play. Okay, so that's pretty obvious, and it can of course got very close up here where we found all this extra resistance and we were dragged down quite a bit from there. Okay, so there's a few things that we have to note. Okay, is one, we come down to the equilibrium area, which is essentially 50% between these two areas, okay, approximately on the Fibonacci relationship chart, and we are below the 50 EMA and the 200 EMA. Okay, so we have to kind of consider that actually this is not the strongest position Bitcoin finds itself in. We can also see that we're overbought on our stochastic RSI as well, and this is on the default settings. Okay, so not using, if I come into here for example, not using the 𝗕𝗪𝗪𝗔𝗠𝗪𝗓, which is how I would normally have this. If I do that, you can see that we're more overbought. If I change this to close, which is the default setting, you can see that it's also overbought. Personally, the close I think is a little bit laggy, whereas 𝗕𝗪𝗪𝗪𝗑 essentially shows us with a more timely where it is essentially. So looking at it, we're overbought, we're below the 50 and 200 EMAs, we're finding that the equilibrium is resistance, we're in a bearish structure, we have a weak low, strong high, i.e. we're likely to move on down. Ultimately, it's not giving me confidence that we have any more upward movements in here to the upside before we continue this move to the downside. So what else can we see from within this area that's worth kind of noting? Well, we can see that if we were to apply Elliott wave theory on top of smart money concepts, everything here starts to look a little on the bearish side of things. So let's go ahead and take a look. So we can see that there's a three-wave structure right in here. Okay, and what we do is we're going to measure the distance here. If I snap that to the right wick with the fibs and pull that onto here, and you can see that our right down here is where we would typically want to go. Okay, basically between 1 and 1.236. I grab that and put it into here. So this basically comes in at 25,711 to 25,950 approximately. So we can see that right inside there. Okay, now we can see this little move to the upside here. Still probably has a little bit of room into the growth to the upside, but not much. We'll probably talk about maybe pushing this towards the 26,554 upwards towards 26,639, but it's limited. It hasn't got too much space to grow here, i.e. we might push up towards this resistance right around, I'm going to just try to eyeball it, right around about here at 26,682 approximately. Okay, where these closed positions were, where these wicks were finding the resistance, this could also find resistance here as well. And so yeah, all in all, we might find ourselves with a 200 EMA moving down potentially towards this 26,682. Price coming up, meeting that, finding the resistance on the 200 EMA, and then working its way down towards our target. Now, that's Elliott wave theory. Let's take that off for a second, but leave our targets in here. The target down here also happens to fall in line with a fair value gap. A fair value gap essentially is where a large buy order has come in here, and there's been insufficient liquidity or insufficient sellers to basically sell the Bitcoin to the buyers, right? Because there's always a buyer, there's always a seller. So when that happens, price has to jump from the low side to the high side, and it's called a fair value gap that gets left behind, as in there was insufficient liquidity in that gap. Price likes to fill those gaps. It's not a guarantee, it doesn't always happen, but it likes to go down and fill those gaps. And I've got an example of this. If we go ahead and just take this back a couple of steps, We'll let smart money concepts just calculate back in. All of these green areas right here are fair value gaps on the way up. Okay, so we see all of this price action to the upside, and you can see that there was insufficient liquidity in these ranges right here. Okay, so the order books were imbalanced, and we get fair value gaps as a result of it. So 1, 2, 3, and 4. Okay, now if I just play a few of these candles, so we just play that. Should hopefully go ahead and you'll start to see this play out, and it will grab the first one. Okay, bounces up, so it fills and respects the first fair value gap, continues, grabs the second fair value gap, created another one, creates one, and it fills them almost instantaneously. Comes down, you saw it also filled that other one at the top there, and then it's going to come down and grab this one, fills it out, and so forth. Okay, now what we find is that we are heading down towards this last fair value gap. Okay, now there's no guarantee that that plays out, it's just typically that's what you would expect to see. Okay, so let's go ahead and remove that. So now you can see that we filled out the other fair value gaps, the other 3 that were up there, but we also had some that were on the way down. Okay, some red fair value gaps that also got filled out instantaneously, right? These imbalances in the order books don't always get filled, but the price action and the market likes to respect them, so typically they do get filled out. Okay, the occasional one does get left behind, but for the most part, they get filled out, which means not only does our Elliott wave theory structure here tell us that we have this low coming in, but our fair value gap also happens to coincide with that range. But we can, of course, continue to move up just a little bit here if we need to. Let's go over into the Elliott wave theory side of things. As you can kind of see, we have this zigzag pattern to the downside. One of the things that is still technically possible, specifically if we were to lose this low down here, is that we end up with a maybe double zigzag, or even worse would be a potential impulsive structure, which if you zoom out of this, you can see I've been mapping a lot of. Okay, and these 1.618 target ranges down here are critical in us understanding that there's a nested position for an impulsive structure. And let me go ahead and try to explain this in a little bit more detail. In a 5-wave pattern, whether it is up or whether it is down, there are 5 waves, right? And they consist of 5 waves in wave 1, 3 waves in wave 2, you have a 5-wave structure for wave 3, you'd have a 3-wave structure for wave 4, and you have a 5-wave structure for wave 5. It's a 5, 3, 5, 3, 5, right? It's an impulsive pattern. But as you can kind of see, there's 5 waves impulsive structure inside the wave 1, which means you could go ahead and map in 5 little waves into the wave 1, 5 little waves into the wave 3, right? And 5 little waves into, I'm really badly drawing this now, into the wave 5, right? And then, of course, the same would apply to these. They call it degrees, okay? There's a lot of degrees that you kind of map in, and you can start to see that you end up with these nested positions. There's 5 waves inside this little wave 1, which happens to fall inside this wave 1, right? And all of that big wave 1, wave 5 waves there, that could all be a wave 1, right? And it does something like this. And so I talk about this because what we're finding with Bitcoin right now is that if I move on down here, we have all of these 5-wave structures, and they're hitting 1.618 targets, which essentially means that we're getting these nested positions, and we can actually visually see them on the 1-hour chart. Now, on the daily time frame, for example, when we actually zoom out of this, it looks slightly different, okay, because we don't have that ability to look at it in that kind of way necessarily. What we do see is wave 1, wave 2, and all of this coming down here would be our wave 3, up for 4 and down 5. And now inside here, of course, we can look at 1, 2, 3, and I think we're going to actually see this come down significantly deeper by the time we actually get that mapped out into the daily. For example, all of that there could just be a wave 1 eventually, okay? And so on our weekly time frame, things would start to look like they're slipping down significantly, right? And we'd see potentially here a wave 1 up for wave 2, which is retesting 30k, for example, and then a move down, up, and then down. Now, the problem that you have is 5-wave structures, that if you start with 5 waves, you must end in 5 waves. There's no pattern that starts with 5 waves and ends in a 3-wave structure. Okay, so they all must end in 5 waves. And so if we think about that, that might mean that we've got ourselves a bit of a problem here. Okay, if we do complete a 5-wave structure on a weekly time frame like this, then we do not have a 5-wave structure up here. It would have to be considered a kind of flat correction of sorts, or some kind of 335, which would basically be a flat correction, or alternatively, we'd have to have a zigzag pattern at the end here. And a zigzag pattern essentially is a 5-3-5, which means you have 5 waves down, 3 waves up, and then 5 waves down, and you complete a zigzag pattern. And so that would actually tie in nicely with a big A, B, C structure, like so. Okay, so when we start to think about the structures of what's going on, and a lot of people that maybe not so au fait with Elliott wave theory are maybe a bit blind to it, is all of these 5 wave structures are very important in building a much bigger macro position for BTC. And unfortunately, it's not going in the bullish direction, at least not in the standard one, maybe more of an inverted bullish market. Ultimately, we're moving down by the looks of it, and that is going to be a problem for the many bulls out there. Now, I've said many times before, that's not what I want. I want us to be in a bullish market, but the data just simply does not suggest that we are. So we want to be quite cautious where possible, and we want to kind of see invalidation if we can. We want to see these structures that are currently showing us with the psychology of people, or tracking the psychology of people in this bearish way. We want to kind of be in the bullish market, but at the moment it's not looking so good. We can see that on the weekly time frame, we got rejected from the supply zone, moving down more towards our 200 EMA. Currently finding support on the weekly 50 EMA. We'll see if that continues to hold, but I suspect it probably will not. We'll still look for a move towards 24K soon, in my opinion. It is still technically possible that we rally up and we target the $35,000 CME. If I bring that up on our daily time frame here, let me just make that a little bit bigger. There we go. You can see the CME gap up here. That's coming in at 34,455 to 35,180. Still technically possible. However, I think it's more probable that we move down first, targeting out the 20,330 to 21,110 as the area for grabbing these CME gaps before we rally on up, i.e. we come down, potentially bounce, maybe come down again, who knows, right? At some point in the future though, I think we will get that 35,000 CME. I just don't think it's going to happen right away, but again, I would like to be wrong. We'll see how things kind of go. Essentially, there are 2 CME gaps here. One's at 35 and one is at 20, and the bulls and the bears are fighting that one out. Yeah, we'll see what happens, see who wins that battle. But for now, 2 CME gaps. I think it's more probable that we get the lower one before we get the higher one, but we'll see how things kind of play out. So yeah, I think ultimately that's kind of where Bitcoin sits today. I expect further downside on the hourly time frame. I expect maybe a bounce afterwards of reasonable significance. But then as we go into the weekend, I wouldn't expect terribly too much. I expect us to probably be oversold on the stochastic RSIs by the weekend. The weekend does very little in the way of price action, but gets us back up into overbought, ready for next week where we see more downward pressure. But let me know what your thoughts are in the comments down below. Really interested to kind of get everyone's thoughts and opinions on what they think is going on with BTC. If you found this useful and informative, smash the like button. If you're new, subscribe. Don't forget to join us down in Discord. And guys, I will catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.